Welcome to the Ask Chris Real Estate Podcast with Chris Phillips from Keller Williams. A successful 20-year veteran in the Middle Tennessee real estate market with over 100 five-star reviews, Chris is known for his knowledge and integrity. Whether you're buying, selling, investing, or just curious, his insight will guide you along the way.
I'm here with David Manier with Primis Mortgage, and we're going to talk about interest rates today. So David, I'll let you go ahead and start in for me.
Just cracking up here. Who doesn't love talking about interest rates, man? Right. You know, it's awesome. Right. No, so there's been a lot of really good stuff happening in the mortgage world as far as interest rates. You know, Trump has had a huge hand in that and kind of what he's been doing to make housing more affordable, right? That's been his big thing. You hear him talk about it in the news all the time, is how can we make housing more affordable, right? And so there's been a couple of, key notes that he's kind of said that they're working on right now, right? Number one, right, he said that he was having Fannie Mae and Freddie Mac to start buying, $200 billion worth of mortgage-backed securities, right? So what does that mean? I'll kind of break this down a little bit. So mortgage-backed securities, right? Those are pools of loans, right? So whenever you buy a home, right? It's like, your loan might be, conventional $300,000 loan amount, kind of similar loans that are like that, and they get sold to investors, to service them, right? So those that do that, so the mortgage-backed securities, that is what kind of drives where the interest rates are, right? So if there's a high demand for mortgage-backed securities, right? If investors are wanting to purchase those, it's going to drive interest rates down. Right? So which is what we're seeing. So basically what Trump is saying is we are going to have, government agencies, Fannie Mae and Freddie Mac, to start buying mortgage-backed securities to start driving down interest rates by increasing the demand for those mortgage-backed securities. So what does that mean for us? So that happened this past Thursday or Friday, whenever it was. I think it was
Friday.
Yeah, so it was on Friday.
It was Friday. So and what happened immediately?
So on Friday, I was looking at where, top tier conventional was at, and we were at like 6.2. And then after that announcement happened, whenever the market opened, we ended up being at like 5.99. So it was like almost like a 20 basis point drop that we saw.
Yeah.
And so that's why, I've kind of talked about in some other videos, now we are at 3-year lows, right? Because we were up at, basically 8% for a while. This is the lowest we've been in 3 years. So whenever I tell people, if you're trying to time the market and figure out when's the best time to buy, so I tell people, now is the time to buy, right? Your interest rate's going to be lowest, which means that your monthly payment is going to be the lowest. So that's the first thing on, kind of what's going on in the mortgage world.
And if you really want to be aggressive, you can do it like right now, January and February, and you're going to be able to lock your interest rate in, and you're going to avoid all the spring rush.
Yeah.
And you're going to be in your home during the spring and planting your flowers and all your stuff when you get there.
Yeah. So that's like a huge thing that just happened. So that's leading to lower interest rates. Another big thing that I think is going to be huge for, affordability for buying homes, right? A lot of times people might say they can't afford to buy a home right now just because they don't have it in their monthly budget, right? So, and a lot of the big reasons why is because I'm seeing a substantial amount of people that have credit card payments, right? That's a big thing. And so a lot of these credit card companies, these cards, sometimes they're offering, it's like 20% interest, almost 30%
on your 25%
on your credit cards, which is just absurd to me. Right. And so, one thing that Trump was putting in was that we're going to start having a 10% interest rate cap on those credit cards, right? So what's that going to mean for us? It means that people are going to have a little bit more flexibility in their monthly budget because they're not going to be paying as much on those credit cards. Right. Pay those credit card balances down so that they can afford more home.
Right.
So that was a conversation I had with somebody was, he was looking at, how much can I afford? He told me, max I can afford is, $1,300 a month for a payment, which is not a whole lot in the long run. Right. And so I had a conversation with him, it's like, this is what you're going to be able to afford. Not much of a house. There's hardly anything out here that you like that is that. And then, so I had that conversation with him of, if you were at a $2,000 a month payment, here's how much that you could qualify for a home, right? You can find some homes that you like. And the reason that I was able to have that conversation with him is he has a $700 a month truck payment. And so I said, let's get rid of this $700 a month truck payment so that you no longer have that. So your quality of life is going to stay the same, right? Because you were paying the $700 for that truck.
Right.
Now, instead of doing $13 for a mortgage and $700 for a truck, you're doing $2,000 for a mortgage and $0 for a truck.
So how does that affect with his debt to income ratio? I mean, it's it kept them under the 42 or 45%.
Right. Yeah. So it's the debt to income. So it's going to stay pretty much the same, right? Because the payments are going to be the same,
Right.
but he's getting into a home that he can afford more, right? Because if he could only afford a $1,300 a month mortgage, we are looking at around $200,000 purchase price home, right? But if he can afford $2,000, I'm like, we're looking at up to like $300,000,
Yeah.
right? So now there's more options, right? So it's not always about your mortgage interest rate, but a lot of times it's your total household interest rate, right? What your total payments are, right? And so that's what's so important about, getting with me, talking, or just with any mortgage professional in general to figure out, what's the best scenario for you, right? Because it could be, maybe now's not the right time to buy, right? Maybe you do need to clear up some of your debt that you have, right? Pay off that $700 a month truck payment that you have, right? If you have,
or sell it and get rid of it.
Sell it, like whatever it is. I'm like, let's have those conversations now so that you know what goals you're working toward, so that you'll be able to buy whenever you're ready, right? Because if your lease is coming up in 1 month and you need to figure out how to buy right now, if you're running into these issues, you're going to end up making a poor decision, right? But if your lease isn't up for another, 6 months, 9 months, 12 months, we got some time to plan accordingly.
Right.
And then we can figure out what's the best scenario for you. So.
Right. Okay. Well, that's your update for interest rates here in 2026. I'm sure it's going to change even more. It's going to be a volatile year, and hopefully it's going to be a good kind of volatile year.
Yeah.
And we look forward to seeing more about it. I appreciate you coming out, David.
Yep, for sure. Happy to be here.
All right.
Yeah.
For answers to all your real estate questions, ask Chris at the Phillips Group, Murfreesboro, Tennessee.